Imagine a place where everything money-related feels frozen in time. For nearly 3 decades, salaries barely budged, prices remained stagnant, and interest rates hovered near zero. Welcome to Japan, a nation with a unique economic story. Today, we delve into the journey of the Japanese yen and explore the potential investment opportunities arising from its economic landscape. The Yen's Journey, Japan's Economic Rollercoaster.
A documentary by Salomon Young.
The Japanese economic miracle. But it wasn't always this way. After the devastation of World War II, Japan experienced an economic miracle. From the 1960s to the early 1970s, Japan's economy grew at an average annual rate of nearly 10%, driven by industrial expansion, technological innovation, and a burgeoning middle class. By the late 1980s, Japan accounted for 10% of the world's total economy, with real estate and stock markets hitting record highs. Tokyo's Imperial Palace was once valued higher than all the real estate in California. The Nikkei 225 stock index soared, reaching an all-time high of 38,957 in December 1989. The nation's aggressive industrial policies, technological advancements, and export-driven growth seemed unstoppable, positioning Japan to potentially overtake the US as the world's largest economy. Bubble burst and lost decades. However, in 1989, the Bank of Japan sharply raised interest rates to curb rampant speculation. The economic bubble burst, leading to a massive downturn. By the early 1990s, the Nikkei had plummeted by more than 60% and real estate prices collapsed. Trillions of yen in wealth were wiped out almost overnight, marking the beginning of Japan's lost decade. For the next 30 years, Japan grappled with deflation and minimal wage growth. The annual GDP growth rate averaged around 1%, a stark contrast to the boom years. Japan's debt-to-GDP ratio soared, reaching over 250%, the highest among developed nations. An entire generation grew up without experiencing significant inflation or wage increases. The BOJ's unconventional policies. To combat this stagnation, the Bank of Japan employed unconventional monetary policies. In the early 2000s, it introduced quantitative and qualitative easing, QQE, buying massive amounts of government bonds to inject liquidity into the economy. In 2016, the BOJ adopted negative interest rates, charging banks 0.1% on excess reserves to encourage lending and spending. Yield curve control was another innovative measure, targeting both short-term and long-term interest rates to maintain economic stability. Despite these efforts, inflation remained elusive and economic growth sluggish. Unlike other central banks, the BOJ's persistent and aggressive policies reflect Japan's unique economic challenges. The $60 billion intervention. In 2024, the yen fell to its lowest level against the US dollar in nearly 40 years, prompting the BOJ to intervene. Over a 4-day period, Japan spent approximately $60 billion to support the yen, marking one of the largest interventions in history. This move came as the yen fell below 160 to the dollar, a level not seen since the mid-1980s. BOJ's intervention was a response to the widening interest rate differentials between Japan and other developed economies. While the Federal Reserve and the European Central Bank raised rates to combat inflation, the BOJ maintained ultra-low rates, making the yen less attractive. This led to a massive outflow of capital, weakening the yen further. The current situation. Today, the yen's weakness mirrors the late 1980s, raising questions about Japan's economic resilience. A weaker yen boosts export competitiveness, but also increases the cost of imports, contributing to higher inflation. As of mid-2024, Japan's inflation rate hit 4.3%, the highest in decades, driven by rising energy costs and a depreciating currency. Tourism has surged, with over 900,000 Americans visiting Japan in the first 5 months of 2024, attracted by the favorable exchange rate. Major corporations like Sony and Toyota benefit from increased foreign revenue, yet the domestic economy faces challenges with rising import costs and stagnant wages. Investment opportunities and risks. Despite these challenges, opportunities abound. Investors are eyeing Japan for potential gains through carry trades, Forex, and real estate. The concept of Mrs. Watanabe, representing the average Japanese retail investor, highlights the significant role of individual investments. However, history reminds us of the risks, as seen during the Russian financial crisis and the 2008 global financial meltdown. Carry trades involve borrowing in yen at low interest rates and investing in higher-yielding currencies. profiting from the interest rate differential. Real estate in Japan, particularly in Tokyo, remains attractive due to its affordability compared to other global cities. However, investors must be cautious of potential market volatility and geopolitical risks. The future of Japan's economy. Looking ahead, Japan's path to recovery hinges on several factors. Technological advancements and increased productivity are crucial. Japan's companies must innovate to remain competitive globally. Additionally, immigration policies could help alleviate the demographic challenges posed by an aging population and low birth rates. Japan's experience offers valuable lessons for other advanced economies. The need for structural reforms, better labor force participation, and embracing new technologies cannot be overstated. As global economic dynamics shift, Japan's journey underscores the importance of adaptability and resilience. Conclusion: Japan's economic story is a testament to resilience and adaptation. From the heights of the economic miracle to the depths of the lost decades, and now towards potential recovery, the yen's journey reflects a nation's struggle and hope. For investors, understanding this journey offers insights into potential opportunities and risks in one of the world's most unique economies.